an end of a year which is for the industry at large, is the end of a financial year which is established EVs as not a thing of the future but a thing of the present. And Sona, it's trying to or not trying to really, has now firmly established itself as one of the key suppliers of that ecosystem. And Vivek, the conversation today, I would love to split it into one, the financials and the numbers that went for the quarter and the year, and two, how do you see the roadmap ahead over the course of the next 3, 4, 5 years, and what kind of growth journey do you envisage? But thanks for joining in today.
Thank you for inviting me, Neeraj. It's always a pleasure to talk to you. So first up, no spin on the numbers. The numbers are what they are. If you have to explain the numbers, maybe we haven't done a good enough job in producing them. So our job as management is to produce results which speak for themselves, and we don't have to explain them. It is helpful though to understand the context. The context is that our industry is under enormous pressure. Global light vehicle sales, which would perhaps be the best benchmark to compare our performance, has been slipping now for many years. It used to be 95, 96 million light vehicles were sold annually. And if you take last financial year, FY22, it was less than 80, 79. So in the last 2 years, that's the first year as Sona Comstar, as you rightly said, when we acquired Comstar and became Sona Comstar. The global light vehicle sales have reduced by 7%. In the same time, our sales have gone up by 75%. And any company should be looked at. Any company, any individual's performance has to be looked at as a contrast with the industry they operate or the context that they work in. We don't exist in a vacuum. Now, 75% is very good growth. On the quarterly basis, you're right, margin pressures are there. And we think they'll continue for 2-3 quarters. And I always say it, even to my team, that percentages aren't the really material thing. It is the absolute profit. And if just because of mathematical calculation of numerator, denominator, because whatever material prices we get, we pass through. Because of that, percentages slip, it's okay. Because these are cyclical and event-based occurrences. They're not structural. Our business model hasn't changed. 2 quarters, 3 quarters, 4 quarters, there will be a time. See, inflation and high economic growth, both are not going to continue together for some time, right? It can go on 1 quarter, 2 quarters. Something will give. Material prices have to cool off. When? That's the question. And when it does, margins will come back. So that's the short of this quarter. The year was fairly good, I think. 36% revenue growth. Transmitted into profit, I think the profit growth is very high. Net profit is, I think, up by, if I'm not wrong, 68% for the year. However, there are some one-time exceptional items, and many companies don't, but we adjust downwards almost every quarter our profit so that people should have the true picture. Adjusted basis, I think 37%. So every rupee of sales growth has eventually yielded in 1 rupee of extra net profit growth. That's the main goal. That's the thing we work for, which is net profit and EPS should continue to rise in line. That's how we try to manage.
Got it. There will be the obvious follow-up question to this would be, and I'm first sticking to the non-BEV segment because those sales getting impacted due to chip shortages likely impacted your revenues as well. Now, is it possible to predict the impact of chip shortages when it could end? And I'm guessing no, but would want to understand from you. And if that is indeed the case, do the next couple of quarters look highly unpredictable?
So, chip shortage impact, we had actually spoken in our first earnings call in August. I had said minimum 18 months, even at that time. So I would say I would hold to that, perhaps add 3 more months because of the Russia-Ukraine situation. But that is the minimum time. This is a fairly big problem. It doesn't get solved overnight. I think a lot of our peers were optimistic in assuming it would. So we budgeted accordingly. The new problems that we hadn't factored into our budget were, of course, the Ukraine situation and the lockdown in China, which could have an impact, not just so direct impact, maybe not that high, but it is decent. 18% of our sales are Asia, out of which China is the largest market. So as a direct impact, yes, there is. That's why our last quarter sales growth wasn't as much as it could have been. I mean, if you look at Europe plus Asia, that's 45 to 50% of our total sales. And those two markets in March were really, really horrible. So despite all of that is our performance so far. And even next year, all I can say to investors and your viewers is that, look, last 7 years, as an average, we've grown by about 35, 36%. So I don't know about exact percentage, but even this year, we'll have strong double-digit growth for sure. That is something we know because, and we say that while assuming a slightly negative growth on the existing business. Just because of the new programs that are launching, just because of the new customers or products we have. So we are only relying on new additions for growth. To rise with the tide of industry, that has been ruled out for a long time. I think last 4 years, the tide has been shrinking. But you know what I always say is that maybe it's not such a bad thing. This is really a good time for all people to know which are the companies which can weather these challenges, which when the tide is rising and everybody is benefiting, times are good, everyone has growth. If you grow in these headwinds, that's the test of true character for a company, for an individual, for a leader. And we don't always get the opportunity. So I'm in a way thankful that we have challenges. It helps you prove your mettle.
Yeah, no, but and hence you get the valuations that you do, Vivek. So I mean, the market in some fashion truly rewards you and a few other players for the kind of work that they are doing and the kind of opportunity size that is there vis-a-vis others. So in that sense, there is a bit of a quid pro quo that is attached right here, right?